It's Thursday the 26th of January and we are on the Australian dollar US dollar. Just entered into a short position after this candle right here at 9:30. As always, if you want to see the morning analysis from this market, so the reasoning for the support and resistance zones and what I was looking at, just watch the review video of the same date on the YouTube channel. Okay, so basically what this market has done is it has bounced up, it's then made a low, and it has popped up once again. So potentially moving into a downtrend on the 5-minute time frame. Now, when I seen the market breaking down like this, what I really wanted to do was get into a blind sell position up at these levels right here. So 7566 to 7577. However, the market did not reach those levels, so I did not get into that trade, and instead I have been looking for price action, a good setup and reason to get into this market. I got that right here at 9:30, and I am now in a short position. Okay guys, sorry, I had to answer my phone there. I am waiting on a call from my accountant. It was not from the accountant, it was a cold call, which is what I seem to get 90% of the time nowadays. Okay, so in this short position, I am expecting some support at these levels right here. You can actually see we have bounced up slightly from these levels already. However, I am expecting the market to come down through these levels now and make a stronger move down. We're risking 12.6, 12.7 points. So 1% on account at 12.7 points. I am looking to take this market down around about 1-to-1 risk to reward or slightly better, but we'll see how the market reacts on the way down. Support likely to come in at these levels also, with much stronger support down at these levels, so 7,530. So let's see how this trade gets on. I will pause the video, I will turn it back on when I am managing the trade, making any decisions. If it starts to move against me up toward the stop, I'll turn it back on. If it starts to break down, I will turn it back on also. The market has came down and it's tested the management area that we had marked in the chart. You can see the pin, this very small bullish candle, and then the market has broken through and it has came back up and retested the level. Now at this level there was always the potential for the market to shoot back up, retest the previous lows before sellers step back in. It's a very common price action in a trending market. However, it seems like we are getting the reaction off of this level here, and the market is now coming down. There's a couple of things to go over with this trade. The first thing is that I was looking for the blind sell up here, as mentioned. However, the market did not reach, let me delete this arrow, the level I was looking for, and so I just didn't enter the trade. Now, there was always the option to just enter when I started to see the rejection here. However, I had already done the analysis and I had already set the level for the entry. So when I didn't see that, I just had to wait. You know, it's more important as a trader to follow the rule set that you have than just try to jump in because you're afraid you're going to miss a good move. Jumping into a market because you're through fear of missing out is one of the most common ways that beginners lose a lot of money and end up blowing their account. You know, you need to have the discipline to just completely miss the trade. Now the market then came down. Now we had these lows sitting right here. I was fully expecting to get a setup in here, which I would have completely ignored. The reason for that is I didn't want to get into a position straight into these lows where we could potentially see a bullish bounce and a very strong bullish bounce. So I had to wait. We did get the setup right here at 9:30. Came below these lows. I was happy to get into the trade after that. However, if I hadn't seen that setup, I would have just once again missed the trade. It's all part of being a trader. You have to be willing to skip trades that just don't line up with what you're looking for. It's much more important to do that than to try and jump in and catch every move because you're afraid you're going to miss out, because I can assure you it's not going to work out in the long run. You know, one of the most important things to remember is trading, even if you're just starting out and you're just trading very small amounts, but your overall goal is to become a professional trader, you need to treat it like a business. You know, no profession in the world is going to say, this is what I'm looking for, this is what I'm going to do, and then when it comes to it, they do something completely different. You know, they just wouldn't be a professional. It wouldn't work. You have to follow your rules. You have to stay disciplined with what you're doing. We are seeing a little bit of support here. As mentioned, I was really expecting the market to come back up and test these levels. We are all the way down now at the 7540, so I'm just watching the trade, seeing how the price action reacts now that we are down here. The market has popped back up toward the previous swing lows up here. Hasn't quite reached these levels yet, but it has pushed back up for a retest. So as it's broken through the previous lows, it's came back down after retesting. However, the market has subsequently came up to retest the previous swing on what is creating the downtrending move. So now that we have done this, we may still pop up a little bit higher into these levels. However, now that we have came up into this area, I want to see the market coming down. I don't want to see continued strength now that we have tested this level. In a downtrend, after this retest, you want to see the move continuing. Now, when trading in trends, also this area is also the area where the trend can end, because breaking the previous swing low brings that trend to a technical end. So you want to be a little bit careful up at these areas, and I do want to see the reaction coming in. I don't want to see strong support holding at these levels now. It would be a clear sign to get out of the trade. So let's see how this trade goes now. Okay, so the market has rolled over from these levels and came back down into the previous lows. Now in the downtrend, the previous low gives you a clue as to the level of support. You know, it's clearly printed the support for us. The market has bounced and it's came back down, and we are currently holding at this level once again. So now that we have the level of support, I just want to watch the trade around these levels. If we are just seeing bullish action, no further bearish action, then it gives you the clue to get out of the trade. Now this whole part here, the retrace, it was expected. We went over it at the start of the trade, and we talked about how there was the potential to pull back into these levels. It makes sense in market structure on a downtrend. Now the problem is, a lot of people, especially beginners, when they get into a trade, they know that this is a very likely move. However, when they see it, when they are in the trade and their money is on the line, they start to panic. And in their mind, they'll be saying things like, no, this trade's definitely a loser. They'll see, let's just mark some of this in. They'll see something like this, the strong upward move, and they'll think, oh no, this isn't a normal pullback. This is now turning into a very, very strong bullish trend. I need to get out of this trade. They'll see this one once again, and they'll think, no, definitely, this is a bullish trend. I need to jump out. They'll see the little pullback, and they'll think, whew, I'm really happy I held on to this trade. It's going to work out absolutely perfectly. We'll see another bounce up here. It's still not even reached the previous swing low, or perhaps it's came up into sort of these levels. They're panicking, they see the push up, and they jump out of the trade. Even worse, they jump out of the trade and they try to enter into a long position to make back the couple of points that they lost. And the market comes down and does exactly what they were expecting, or what makes sense. Now you have to be willing to take the loss, obviously, because there's nothing to say that the market won't just ramp up straight through, break the downtrend, and take you out of the trade. But your risk should be limited. You know, when you get into a trade, you should only be risking your 1%, your 2%, whatever it is that you risk. And then you should have things that you're looking at that hold you in the trade or make you get out. So when you're in the trade, when you get to this level, you start to see it bouncing. If you are expecting the pullback to come into these levels, you make the decision that if it does that, you're going to hold on to the trade, looking for the market to come back down once again. When you've made that decision, you just hold on to the trade. You know, you're making these decisions hopefully when you are not under pressure. You don't want to start making decisions under pressure. They should all be preset. The reason for not doing it under pressure is because very often you will make mistakes. Okay, so the market is down at these levels. I'm just watching how it reacts. We have seen a bullish reaction right here. If we start to see further bullish action, I will just come out of the trade now. The market is coming down. It's producing a lot of support at these levels. So if we start popping up back above the 7539 level, once again, 7539.5, sorry, I will be just coming out of this trade, and then I will explain exactly what I was looking at and the reason why I am exiting. Okay, so I'm out of this trade for 11.5 points, so just under a 1-to-1 risk to reward. Not exactly where I wanted it to come to. You know, it very well may come down now. However, with it producing the support level here, coming back down, bouncing back up once again here, it's then rolled over. It's been showing tails of support. This one popped down and then shot back up once again. For me, it's just the potential now for people to be looking at this as the double bottom, looking to buy up. So looking for the first retrace up into the key levels, absolutely fine. There's no sense in waiting for a second one because then it would be the double bottom and a lot more bullish. So we're out of that trade now, just under 1-to-1 risk to reward. That was the reason for exiting. Those were the key things I was looking at. The main one to get me out of the trade was we were just showing too much support down at these levels. You can see it just nipping back up again. We're seeing that repeatedly. We've seen the strong move up, and then as it tried to come back down multiple times, it was still popping back up once again. Okay guys, as always, I hope that was helpful. I'm James Orr, and thank you.